problem that we have with our payments technologies is more actually the scarcity. And so you can understand then why the community has prioritized scarcity and decentralization over cost of transaction fees.
How sound is our monetary system, and what role might digital currencies play in the future of money? Well, in this extract from a longer conversation from my podcast, Solutions with David Ansara, I sat down with macro strategist Rob Price, who's based in Los Angeles, to discuss the ways in which money is evolving into the future. Enjoy. All right, but you've underscored the importance of scarcity when it comes to a currency or to money. But there's a new form of digital scarcity that is being offered by new technologies, specifically cryptocurrency. And I know in your writing, you focused a lot on Bitcoin. Could you tell us how these new forms of currency have emerged and what problem they are seeking to solve?
Sure. I mean, I guess the first point to note is that people have been trying to create a digital form of money, ever since the internet emerged. There's many fascinating quotes of famous economists, Milton Friedman, a very well-known economist. I can't remember exactly the year, I think, in the 80s or the 90s, talking about the potential for the creation of a digital money. So people have been working on this idea for many years, and they struggled. It's a very difficult problem to solve. To create digital scarcity is very difficult. If you think about it, in the digital realm, we don't really have scarcity. Everything is kind of abundance. On social media, shopping, phones, electronics, we just have this abundance of information, particularly in the digital realm. You can just create more and more and more. And in fact, many computer scientists became quite fatigued with the idea of creating a digital money. They didn't think that it would ever then in 2008, 2009, Satoshi Nakamoto launched this, was first sent out a white paper to a cypherpunk mailing list, and created Bitcoin, which started as a completely hobbyist idea on people on this mailing list, but it obviously has grown exponentially over the subsequent years. But they managed to solve this problem of creating digital scarcity. And I would describe Bitcoin as three things. And there's lots of different frameworks to think through it, but maybe to summarize, it is three things. It is one, that has solved this digital scarcity problem. It is a digital store of value. And the way to think about it is actually quite similar to something like gold. The way that gold is difficult to find and difficult to mine. And even if gold, the gold price were to increase from where it is today, around $1,800, if it were to double, you can't increase supply of gold very easily, because you've got to find more mines, and mines can only produce so much. So it is a scarce asset, and gold functions as a store of value over long periods of time. It holds value. It can be volatile over the short term, but gold does. If you look at the return history, it actually competes with many equity markets, many property markets, and it has a very important role to play in portfolios as a result. But anyway, the point just being that it's a good way, if one can understand gold, and unfortunately, many traditional investors don't have a good understanding of gold. But anyway, and then we can get onto the consequences for Bitcoin too, because it gives us a good lens into understanding why many traditional investors don't understand gold particularly well. But anyway, I was talking about the three main characteristics of Bitcoin. It is this store of value, and despite the fact that Bitcoin itself is even more volatile than gold, it does store value over long periods of time. So it has solved this digital scarcity problem. Second, it is a digital payments network. Because it is on the internet, it is truly borderless. I can send money to you in South Africa. I can send somebody to somebody and send money to somebody in China today. It is this borderless payments technology, which is pretty incredible if you think about it. If I want to send money to you in South Africa via the banks, you have to go through all these intermediaries, pay money, and wait time for that to be executed. Sometimes you need to get even, approval. And I was trying to get, Bloomberg paid for the other day, and it was, I was cut off from Bloomberg because Saab needed to approve the payment. This is it's pretty incredible. But anyway, so Bitcoin is a digital payments network, which is pretty powerful. People can now transact borderless. One of the initial use cases for Bitcoin was to send remittances across borders at much quicker and cheaper rates. And then the third one is, once again, a little bit more conceptual, but I think is an important framework, is it because Bitcoin is a store of value, and because it is a payments network, and it doesn't rely on intermediaries, it is like an independent system of property rights itself. It doesn't, you don't need to go to a judicial system to adjudicate on who owns what on the Bitcoin network. The Bitcoin network tells you who owns what on that network. And so it is its own ecosystem that is developing entirely. I mean, of course, it is related to the traditional financial system because capital flows in from the outside, but it doesn't rely on the external financial system whatsoever. It is its own independent system. So that is kind of, I guess, the three principal ways to think of Bitcoin.
Enjoying this analysis? Click here to sign up for our 30-day free trial for more content from the CIA.
Well, one of the things that I've observed about Bitcoin is that many people are taking a buy and hold strategy. They're kind of long on Bitcoin. So they're definitely seeing the store of value. But the actual transactions, as far as my reading can tell, are actually, the volumes are quite low, that the transaction speeds are often quite slow. And because most people are taking a longer term view on Bitcoin, it's not actually being used for day-to-day transactions.
Yeah, great point, David. So this gets, I guess, into the understanding of what Bitcoin is trying to achieve. So to create a completely independent store of value, it requires the technology to be very sound and to run particularly effectively for long periods of time, and for the principles to be well guarded. And so the principles of Bitcoin being decentralized and having a very clear constraint on the supply are more important than the actual transaction fees. And what the Bitcoin community has decided over time is to elevate those relative to transaction fees, because those are more important. Like, there are ways to transact on Bitcoin at cheaper fees by using second layer solutions, and some of those aren't all as perfect as we'd like them to be yet, but there are ways that one can transact on the second layer at cheaper cost. As an example, if we're on the same exchange, we can transact with each other at cheaper costs. Or if we use different technologies like Lightning, as an example, that is a second layer solution that allows us to transact at cheaper costs. So don't get me wrong, those technologies have room for improvement in how to find ways to transact at cheaper costs, but there are ways to do it. On the base layer, the choice has been to prioritize decentralization and affirmation of the constrained supply, because if one starts to kind of compromise on those to get cheaper transaction fees, that might risk the whole project altogether. And there's a great history that one can read up on if you're interested in the kind of the block wars debate, where there was a big friction in the community because some people wanted to focus more on payments, which is a logical argument to make. They say, listen, Bitcoin needs to be digital cash. We need to be able to transact at cheap costs. And they wanted to increase the block size of the blocks that are processed every 10 minutes. But as I said, there were risks to centralization. There were risks to the what the impact might be for the future monetary policy. And so there's a trade-off there. And so hopefully you can understand that the trade-off implies that at the moment the community has decided that to prioritize the scarcity of the network and the decentralization and create cheaper transaction fees on other layers. And it's, I guess, the last point to note here is that, Bitcoin is still incredibly useful, even though transaction fees aren't as cheap as you might like it to be. It depends what you're using it for, right? If you're using it for high value transactions, well, then you're not too concerned about the costs. And if we're envisaging potentially, and we might get onto the where to for Bitcoin in the future, but if you're envisioning the potential that Bitcoin can actually become the center of a new financial system, then you're not going to be using that technology to buy a cup of coffee. You'll be using other technologies. And if you even relate it to the world that we live in today, the technologies that we have for buying a cup of coffee are already pretty good. Credit cards and debit cards, and in America, Venmo and Zappo and all these technologies, they're pretty good for cheap payments. The problem that we have with our payments technologies is more actually the scarcity. And so you can understand then why the community has prioritized scarcity and decentralization over cost of transaction fees.
So I've heard some commentators say that cryptocurrencies and Bitcoin today is sort of like how the internet was back in the early to mid 1990s. That it's this new technology, but the kind of second generation technology that developed on top of that was really how the value of the internet was unlocked, and that there's a parallel to Bitcoin today, that you might get these additional protocols that might be bolted on to how we trade or how we do daily transactions. But that it's more important to focus on the underlying foundation of money and the scarcity aspect that you mentioned. Thanks for watching. If you enjoyed this analysis, you might want to check out the full conversation with Rob Price on my podcast, Solutions with David Ansara. We've linked to that here. Also, let us know your thoughts in the comments section below, and don't forget to subscribe to this channel if you haven't done so already. Until next time, take care.